Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Tuesday, last day of the month, 30th day of September 2014, and this is the daily report for gold and silver. We do have a stronger dollar today, very strong, and we have precious metals across the board trading lower. First to gold, currently trading at 1208.53. Puts it off approximately $6 on the day. It's had a low of 1204.40. We'll talk about that in a second. A high of 1218.80. And as I said, currently off $6 on the day. Silver is also off and off dramatically. It is trading off about 47 cents. You can see it trading just below $17 per ounce, as we talked about yesterday. $16.99 current print on the screen, the low $16.88, the high $17.56. More on silver in a little bit. Traders, in as much as I have been looking at the potential for some sort of a bounce in gold, my sense was that we would get some sort of possibly a bounce and then start heading lower. Nothing could be further from the truth. In fact, what we are seeing is absolute consolidation in this particular area and price point, with the highs around 1224 and the lows just at about 1200. This, of course, being our century mark 1200 here. And here's what I'm looking at. Today we had a high of 1218. Over the last couple of days, if we look at them, we have had these series of lower highs, not each and every day, because we've had these small inside trading days. And so what we're really looking at is the fact that as this market has been coming down, as it attempted to recoup in some manner, such as right here, this small green candle and this small little update right here, these two small green candles that I've just highlighted in magenta, those were simply, I believe, short covering points in which they're still drawing the market lower. Now, I'm looking for a place to re-enter the market from the short side. That's been my strategy ever since we pulled profits on our last short trade. I see absolutely no reason right now to believe that we are going to see, at least in the next couple of weeks, maybe to a month, higher pricing. And I am still under the assumption that we could easily break below 1200 and go and test 1180. From there, we'll take a look at our strategy if and when we reach that point. Now, what I've done in essence is I've created two different fib retracements. One from 1322, in other words, this top down to the lows that we had prior to this. Of course, we've had these lower lows here, and then another lower low today. And then I put another fib retracement from 1277, another one of these tops, to the same bottom. And what we're looking to do is really to find areas of fib retracement in which we could expect to find some real resistance if the market was going to take off. Now, what we have found is that this lower level, this is a 23% retracement. It is a retracement from the shorter term move, meaning at 1277 down to 1207. You can see we do have a couple of highs that come into the market, but to me, what's really most important is the bodies, because realize that the bodies are the relationship between the open and the close. And of course, in Japanese candlesticks, that's what's most important. Now, these are half a day candles. So we're breaking up the part of the day which trades in the United States and then overseas. Overseas is typically quieter than what we get here. And therefore, when we look at that, this is our mainland, this is overseas. So really what we're looking at is this market currently trading at 1207, 1207 being a prior low that we got, attempting to find some support. But my sense is right now that we are slowly, methodically drifting lower. And all we're seeing in this consolidation is a point in time in which the market attempts to form some sort of base. I believe it'll form a base and then head lower. It has not even had the ability, as this market has moved down, you'll see you get these dramatic price moves down, you get some attempt to recoup. And when we look at it in this way, this is probably maybe a 50% retracement back to price. The market moves down and you get 3 up days and then a higher high on this day, only to be followed by a lower low. Again, it attempted to make it to higher ground. So we have these periods in which there is a real attempt to bring the market up, but it is to be uneventful at best. And so what we're looking at is, even with these dramatic days where we do see rises, those have been followed by dramatic down days, and we are getting, especially on today's trading activity, a lower low. So what is my strategy and what is my suggestion right now? Well, we've got this top right in here at around 1224. I do recommend placing a price order in the market anywhere between, call it 1220, and I'm not very good at writing with a mouse, but 1220 and maybe 1224 to initiate a short position. You would then place your stops. They could go above 34, but I would recommend putting them right above this top here. I don't really see the market having any kind of a steam to get there. But what I am suggesting in terms of the strategy is putting some sort of price order in, so that if we get some sort of clip back up near these highs right in here, today was 18, we have the ability to re-enter the market from the short side, because if it continues to break harder, I will probably issue a sell signal, but we're not going to get in as much of an advantageous price as we could by picking a price order. So again, put price orders in between 1220 and 1224 to go short the market, placing stops really just above this point here, call it 41.42. So traders, what about silver? Dramatic break below what we had pegged as support. If you recall, we were looking at this particular area as a supportive area. It was based on a couple of things. Most importantly, it was based on historical data points. Let's go ahead and compress this chart so you can see where this came from. And what we were really looking at was the fact that at some point in the past, we really saw this act as a supportive area before really taking off and just flying in terms of the market itself back up near 50. We labeled this as an area of critical support. We have broken through that area. So what does that mean? Well, we've got a couple of different price points we can look at, but the major one, and we talked about this a little bit yesterday, and I'm trying to bring this in as straight as possible, really doesn't come in till about $16 per ounce. So my sense is, on a technical basis, we're probably, as I said yesterday, headed to the low and mid $16 range. Now, you might ask why I haven't put out an official sell recommendation in silver. And really what has been precipitating my calls in gold as opposed to silver is volume and open interest. It's the liquidity in the market, because my sense is that dollar for dollar, we're probably better off in terms of a safety factor in gold, being able to get in and get out at prices we see on the screen as opposed to prices we see in silver. The dramatic move has no doubt been in silver in terms of percentage losses, but there is such a difference between liquidity in the two markets that I believe in making money but conserving money at the same time, and that's why I feel more comfortable with gold. Again, I have set out a recommendation to put in a price order to sell between 1220 and 1224. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.